Hello traders at CMC Markets. This is Trevor Neil of RRG Research presenting our weekly update for the week of, I'm recording this on Friday the 3rd of November. We can see some notable features here in this relative rotation graph of asset class ETFs versus MSCI World versus stocks. This is a top-down approach to market analysis, so looking at the world as a series of opportunities through stock markets, bonds, precious metals, real estate, etc., and which types of equities as well. And we can see here there are some interesting messages. The furthest to the right, although not pointing northerly, is commodities. In particular, we've got gold, which is high and pointing northeasterly, good direction. We've got also to the right, and we've got the QQQ, the tech stocks, US equities here, and making all those on the right hand side, right of the vertical axis. So on a relative basis, the trend is outperforming the MSCI World. The inside here, we've got the interest rates improving, and this is probably going to be big for the future. The small caps and the Russell really doing really badly, and then emerging markets stubborn. And just want to have a little look at Europe, which is in a good direction. The emerging markets too, but Europe is. And I just want to have a look at those charts. They're particularly interesting, the European charts. Next, we look at stock indices here versus the MSCI World. Julius last week showed this graph, and he showed in two versions, and he showed versus cash in the middle here. And he made the point that stock indices worldwide are actually underperforming cash, and that situation still exists. So none of them are particularly good, but some are less bad than others. So which stock market should we be in if we're going to be in stocks? We've seen already from the asset class that there are better things to be in than stocks. We've got the FTSE coming around here pretty strongly. This is something we picked up before. We've got the Nasdaq has reversed around, the Nikkei 2 has reversed around. The S&P and the Dow are on the right hand side of the 100, but not that good. And then here on the weekly chart sampling, we've got the DAX, the stocks, and the CAC. And then we've also got the FTSE. So European shares looking like there's potentially a change in the situation where they've been stubbornly underperforming the market. This is the same, but with a daily sampling, and you can see who's crowning the leading quadrant here: DAX, CAC, stocks, all looking really good. FTSE has come back a little bit, but returning upwards too. The Dow is an unusual position for the Dow. It's furthest to the right and strong. Nikkei 2 is good. Over here is the Russell 2000. The breadth of the US market is really awful. Before we go to the indices themselves, it's worth looking at the constituents of the sectors in the US S&P market. We've got utilities, and this is really showing that change in mood in interest rates, and now utilities, and usually is the best looking sector in the leading quadrant. Now this is the Nasdaq, and we have powered ahead here in recent days very strongly, but into areas of resistance around 15,000, an old previous high at 15,240. This high here at 15,300, down the downtrend line, very clear, four tops in place there, high, lots of resistance. We're going into a big body of resistance now. It has got momentum on the upside, as we see from the MACD, and then on the RSI you see it's strong. So it is strong, but it's got a lot of resistance above. There may be something better to look at. Now looking at the Dow, we've got a similar sort of picture. It's strong, a lot of resistance, 34,100, then strong resistance here at 35,000, and even from this low and that high there. The MACD here has crossed up, and the RSI is very strong indeed, but a lot of resistance above. The S&P Again on the daily chart, we've got a series of lower highs in place here, not yet under threat. We've got resistance above 4,400 and a bit of consolidation resistance just ahead of us, following this really meteoric rise that we've had in the last few sessions. The MACD has finally crossed upwards, and the RSI is very strong indeed. Pretty good reading here of around 65, not yet overbought, can go further. Let's quickly look through the stock indices in Europe. So starting with the CAC, remember we saw that in the RRG swinging around quite strongly on the daily chart. There it is there, doing very well on a relative basis, actually better than the advances that we've seen in the S&P. On a relative basis, this is a stronger advance. However, it's about to meet for the first time significant resistance at 7,100. 1, 2, 3 lows in there, consolidation, and here we are at it now. I would not be surprised if it stalled in between here and the downtrend line, which is at the moment at 7,200. MACD has crossed upwards and the RSI is very strong indeed, but this pattern in the MACD is still rather negative with lower highs and lower lows in it. So I'm not so sure this is as attractive as it looks in the RRG. That probably is that because it's probably done it now. This was the move there. Now moving to the FTSE, the situation here is really terrible. We are coming into a new area of resistance, but an intensity from a consolidation from 7,500 all the way up to 7,700. It's wide and it's high, it's got a lot of area. We've come up not so strongly as the other markets and the other indices, and it's the weaker of the bunch, the weakest of the bunch, and it's got a tough resistance ahead of it. I can see it stalling and really struggling to keep up and underperforming again the indices. Then finally, in the European sectors, the DAX. DAX does look quite promising. I must extend this line here. So this held at an important previous historic strong support level. We've come up strongly. The MACD has crossed. We're pushing hard into resistance. Now this one has not got a block of resistance above it. It's got resistance, yes, we've been higher previously. We're very close to the downtrend line, which is pretty well formed. That's at 15,300. We're moving with some power. Here's the power that we see in the RSI. So of all the stock indices, I would say in Europe, the DAX is the best looking, although it too has got resistance, and we see that overall stock indices are underperforming even cash. We've seen in the RRG chart the potential for once again for the Nasdaq, and let's look at what drives the Nasdaq. Clearly, it isn't broadly based, it's very narrowly based. It is Amazon, Microsoft, Apple, Meta, AMD, Nvidia, Google, and that's it that's driving it, and the rest of them really are hardly participating. So here is that as expressed as the stock, which is called FANG Plus, and it's a tradable ETF. And here we've got this downward channel, recognizing the sell-off that we had in that area, and then the pickup that we've got now. We've got a downtrend line, which is at 7,700. We're crossing on the MACD, and the RSI is looking steady. So the sector itself is steady inside this declining range. Now, which ones are going to lead us up if we're going to break up in this? We have got some considerable momentum. There's two I like. One of them is Microsoft. Microsoft is working higher. See the MACD crossed right back at the beginning of the month. We're pushing forward here after having supported 310. We are in an area now where there's very little resistance up to the high up here at 367, and it looks as though it's pushing. The gap is widening on the MACD. Nice to see something strong and bullish here, and the RSI is once again pushing up. This one looks good, and would probably benefit the most if we break the downtrend line in the FANG Plus stocks. The other one I like is Meta. Meta during the decline that we've seen in the Nasdaq, relative decline, and also in the FANG Plus, that down channel that we just were watching, Meta really was refusing to go down. It didn't want to participate. And so here we are, looking pretty strong on the daily chart here. We bounced very well at 275, reversing very sharply here. We are turning up towards resistance at the high. The actual high is at 331. And we're pushing powerfully towards it. We're not far from it right now. I know we've got a little negative movement there, but the MACD is close to crossing, and the RSI is not overextended or anything. It's just pointing up. So this is very close indeed, and does seem to want to outperform the others in the group. Now moving to commodities. I want to look at this in an unusual way. Usually we look at the tradable futures markets using the CRP Russell index as our benchmark, and we look at them versus it. But I want to broaden this out. This is a list here I've made up of all the tradable, albeit not necessarily on futures markets, but also on OTC markets, commodities, where there is actually a liquid market. So you'll see some unusual things here. Ferrous iron ore, 62%. There's also iron ore, there's rhodium, there's propene, urea. So many unusual things, but actually big traded commodities. But I just want to make a brief point about this. I've made the movement on the 1 month percentage movement and the year to date percentage movement. And so what is driving this commodities ETF around the RRG chart up at the top and pointing east in the leading quadrant? And we say, so by ranking them by strongest to weakest in each sector, we've got, say here, we've got UK gas up 27% on the month, but that's a bounce from a fall, and we're actually year to date still 32%. So that's not a rising market with increasing momentum. We want both of these to be positive. Here we see it, steel, 26% up this month and 33%. Probably steel is not something that you would trade. But another thing which is both positive in the monthly and in the year to date is gold. And gold looks great, I would say. And so we're going to come back and look at that. And many of these things are actually negative. Iron ore is positive in both cases. Of the other commodities, look here, we've got tea, both positive, and that's 10%. That's quite a good jump. Orange juice, we've got to mention orange juice. It's in a 3-year bull market. That's a big driver, and that is a futures traded contract. It's hard to find anything else. Really, it's gold. Let's have a look at the gold, and we'll look. And finally, gold. Here's a weekly chart firstly, and of course everybody knows about the 3 tops at 2068, just above the 2000. It flirts with the other side of the significant historic 2000 level. We're right at 2000 now, and looking, I would say, extremely strong. It's well supported at 1800. The MACD has crossed up, and the RSI on the weekly basis is strong, although we've just had some pressure. Moving now to the daily chart. In the daily chart, we can see these 3, 4, 5 highs, really just below the 2000 level. We've broken those highs, and we flirted with 2000, then come back, and it looks as though it's stabilizing here, and that's good. We've got strong uptrend in place here. We see it in the MACD. Yes, it's narrowing in a bit. Sometimes it narrows and widens out again, but in the RSI, we've soared ahead, we've come back, corrected, and it's pausing, but still up at 65 because it's strong. I thank you very much for joining us, and look, from starting with the world as a series of asset classes down to the stock indices, the FANG Plus stocks and what's going on in there and where the opportunities may lie in that, European stocks, and then looking at commodities. I thank you all very much indeed. This is Trevor Neil from Relative Rotation Graphs, wishing you a great week, and may the trend be with you. Goodbye.